Hello, good evening once again. Sorry for keeping you idle. So we tend to start by 6:05, so we just have 1 minute to allow a few others who would be joining in successfully. So by 6:05, we'll proceed to start the event. Thank you all. Good evening, everyone. Good evening once again. So it's 6:05 already, so we'll go ahead to start the events. So yes, you're welcome. Good evening, everyone. Welcome to our monthly professional lecture organized by the Society of Petroleum Engineers, Section 104 Warri. It's honestly good to see lots of people who are kind of like intentional about their growth, especially as regards their financial status. So today's topic, which will dwell on smart investment strategies for early career starters, is definitely one that all of us can actually like resonate to it, and all of us are actually concerned about because when we start our careers as young professionals, we definitely want to be on the right path, able to figure it out, with respect to salary, responsibility, lifestyle choices, and lots of others. So we believe that we're going to have a very robust and very resourceful discussion here. Um, Bearing in mind that we have a very resource person we have who has vast experience in this area and it's more or less like an SME in this field, I believe we're going to have a very good conversation and be able to learn and also unlearn, learn and also relearn in the process. Once again, good evening and thank you for joining us in this session. So we'll proceed straight forward to our safety. Okay, we have other events being displayed here. So I'll just run through it so that we have an idea of what we actually have lined up. By way of introduction, my name is Jude Adele Ogedegari from the SPYP section here in Warri. So other activities being displayed here, other events rather is being displayed here. So we have the Modus Welcome, which I've just taken, and we also have a safety brief, which will be taken by Macaulay Ogenebure. We'll move straight to the opening remarks after that, which should be taken by the immediate past chair of Warri section, SP Warri section, Mr. Tamuno Tonye Biambo. Also going to proceed to introduction of guest speaker after that, and then we'll dive proper into the professional lecture, which will have our resource person here, Jesus from Emmanuel here. After which we know that you have lots of questions to ask, and then we'll be willing to entertain those questions and have the resource person also give our expertise answers to those questions as well. There's no professional lecture doesn't come with a certificate of and we go straight to the photography session where we have a memory of what we've actually learned and still of the beautiful faces. After we have a brief announcement section on that the SP awareness about upcoming events and food which is taken by Janet Adishujo, and then we have our closing remarks taken by Joseph Adore. So that's like a brief run through what we have outlined this evening. So without much ado, we go straight to the safety brief, which is taken by Macaulay Ogenebure. Thank you. You may go ahead.
Okay, thank you so much, Jude. Good evening, everyone. Please confirm I can be heard.
I can hear you.
Okay, thank you. So I will be walking you through the safety brief for this event. Despite it being a virtual event, we ought to still stay safe in our environment. So, pardon me. So, do it will mute your mic when you're not speaking. Ensure to raise your hands when you want to speak. Use the chat button. We have see for comment, queue for questions, and maintain a good sitting posture. For those using their headsets, ensure you could still hear the fire alarm and try as much as possible to be alert and aware of your environment. We are not expected to have a drill, but if there is any wherever you are, ensure to leave the meeting, attend to any emergency, then come back to the meeting. Ensure to stay safe always as well. Thank you. Over to you, moderator.
Okay, thank you so much, Macaulay, for that. Looks like I had some glitch on my end, so it knocked me off for a moment. So yeah, thank you for that. So we're going to cover the importance of safety, and this safety bit that has been outlined for us is so that we have a very fruitful deliberation without any visual distraction or interference. So move straight to the opening remarks, which will be taken by the immediate past chair of the SP Warrior Section 104. No other person but the indefatigable Mr. Timington Yambo. Welcome, sir. Please go ahead to give your opening remarks. Thank you, sir.
Good evening, everyone. Confirm you can hear me. Confirm you can hear me. Okay. Means you can hear me. So I am very, very happy, feel privileged to be the one making this opening remark on a very important topic, financial investment strategies for early starters, career starters. But I guess whenever you start is early. For most of us that probably did not have this kind of opportunities, um, it is also for us. So I guess it's for everyone, and I'm happy it's coming at this point in time. Like I said earlier, at the beginning of our career, most of us did not have such opportunities where we had experts speak to us on how to manage our finances. We made a lot of mistakes, and so it's good that SPE at SPE level we are having such meetings and such opportunities to to have this kind of lecture. So I am happy that we selected the best facilitator for this. I see our facilitator is a portfolio manager for a company that manages funds. Um, so I think this is the best for this kind of lecture, and I trust that she will do justice to this topic. I just want to urge every one of us that are participating. I don't know. I see 14 people on the call for now. I hope others will join. The number is also increasing, um, so that we will benefit from this. And I hope that our facilitator will also provide some materials beyond this meeting for us to take and digest more, to entrain these financial strategies that will be taught here today. Without much ado, I just want to declare this meeting open. I hand over to you, Jude, to to take us through the process. Thank you again.
Thank you so much, immediate past chair on SC Warrior Section. Thank you for that welcome. Like you said, yeah, yes, a couple of persons who are now more like seasoned professionals in the field did not really have the opportunity to have this sort of lecture. But through SP, YP here in Warrior Section, they're bringing you this opportunity to be able to be exposed to financial investments at such early stage of our careers as young professionals. So without wasting time, we'll delve straight to meeting with our speaker, who is already on call with us here. So today we're going to be having our discussions, a professional lecture on financial investment strategies for early career starters, which will be taken by JC Tututum Emmanuel Gia, who is a senior portfolio manager at Vetivo Fund Managers Limited. So I'll go straight to introducing our guest speaker. She has a very rich profile, as you can see. So she is fondly called JT, as she is an investment professional with over half a decade experience working in the financial services industry. Her experience cuts across managing equity-based exchange-traded funds, ETFs, fixed income ETFs, money market funds, USD fixed income fund, HNI portfolio and relationship management, investment product development, and personal finance advisory. JT's knowledge on ETFs and equity markets has earned her invitations as a commentator on TV and radio platforms like CNBC channels, Arise, New Central TV, Lagos Talks Radio Show, and City 101.5 FM radio show. Currently, she works as a senior portfolio manager with Vetiver Funds Managers Limited, a SEC licensed asset management firm. JT holds a first-class BSc degree in economics from Babcock University and has a diploma in securities and investments, CIS. Ladies and gentlemen, please help me welcome JC Tututum Emmanuel Gia.
I'm also welcoming myself. Thank you so much. Thank you very much for the warm welcome. Good evening, everyone. I'm extremely excited to be here. Wow, I feel so loved. I feel really loved with all the welcomes I'm seeing in the chat box. Thank you so much. Thank you so much. So much. Thank you. Thank you to the coordinators for, just putting this together with respect to just helping people have a head start when it comes to making financial decisions. I think one of the things that has also helped me as an individual is actually starting early. When I mean starting early, I'm referring to with respect to financial decisions, right? I started early, so I'm really glad to be here. But before I get right into it and also share my screen, I'm very curious. I want to hear from you. What are the expectations you have for tonight's session? What are the expectations you have for tonight's session? Yes, I can see the drum roll from Jude. Yes, I love it. I love it. So in that spirit, I want to see your expectations. What are the expectations you have from tonight's session or this evening rather? I'm also glad to be here. Wow. Oshiole says to learn how not to make financial mistakes. Love it. Love it. Love it. I want to see your comments. I want to see your comments, please. Expectations for tonight's session. Okay. Paul Alabi says, I'm looking forward to know valid investment platforms. It's very critical. So that way we don't hear the money that I put in as, Mijoma says how the stock market works and best investment strategies. So good, so good, so good. Thank you so much. So I hope I'm able to, do justice. Jude says my expectation is to learn how to be a wise investor. And on a lighter note, road to become the next Dangote and Otedola. That's very nice to see. But the truth about it is, no matter how we ate it, we ate to hear things like this. Not everybody will be Dangote and Otedola, and really, it's fine. It's fine. So I'm just going to go ahead to share my screen. I'm going to go ahead to share my screen shortly. So please do let me know when you can see my screen. Okay, can you all see my screen? Okay, can we all see my screen? But then the issue with this is it's
Yes,
going
ma'am.
to be difficult to see your comments, and I would love to see your comments. Okay. Okay, that's fine. So I think maybe so the only challenge with this is now that I have enabled the slideshow, I'll be unable to read your comments. But be rest assured, right after the session, I will read all the comments, questions. I'm really glad to, take that. So the topic for tonight's session is financial investment strategies for career starters. And just like I said, I think by God's grace, I've been privileged to also, start early with respect to making financial decisions and things like that. And my goal for tonight's session is very clear. I have three major objectives. I want you to leave tonight's session knowing how to budget, because when you talk about finances, right, you look at two major things. The first thing is you are looking out for how can I grow my income. The second thing you're looking out for is how can I reduce my expenses. Now, in reducing your expenses or growing your income, one very important tool that would show you or would serve as a roadmap in guiding you on how you should increase your income or reduce your expenses is what we call a budget. Because a budget is basically just a picture. This is what I have. From what I have, this is what I can spend. And it forces you to think, right? It forces you to think with respect to how can I grow that income and how can I reduce the expenses. So I expect you to leave today's session knowing how to budget. The second objective I have for today's session is, sharing investment options with you, right? For early career starters, like what are the different opportunities available to you out there? And I would also love to hear from you with respect to, okay, if there are any financial mishaps you've encountered, like you just giving me that feedback. Then the third major objective is teaching you strategies on how you can grow your finances via investment assets, right? Because if you look at it critically, there are two ways you can actually grow your income. We have the active income generating opportunities and the passive income generating opportunities. So the active income generating opportunities are things like, okay, you getting a job and you're earning some form of income, you trying to get different side hustles that bring in money for you. Then passive generating side of things are things like investing in stocks, etc. And I mean, we'll get there as we go along. So are we together? I would love for this session to be interactive, even though I can't see your chat. So are we together? You can just give me a thumbs up. I think I can be able to see the thumbs up. So you can just give me a thumbs up if we're together. Okay, good. So let's jump right into it. Like I said, what is a budget? Why do I need to? Or before we even talk about why do I need to budget, the topic is financial investment strategies. So why do I need to invest before we move on to budgeting? I don't know how many of us knows or know Warren Buffett here. It's very popular. When you talk about investments, Warren Buffett is one person that comes to mind for everybody. And he has, a quote that I love so much, which is, if you don't find a way to make money while you sleep, you will work until you die. You will work until you die. So that's why people are always looking out for, okay, with all these active income generating sources that I receive on a daily basis, my salary, maybe not just my salary, the money I'm getting from maybe friends, family, my parents, you need to always think about how can I sweat that money? How can I make that money work for me? So that way you're able to build the discipline, and as you begin or as you continue to grow your income, you've gotten so disciplined such that even when your income increases, you're used to, setting something aside for investment? Because if you look at it critically, there's no billionaire today that doesn't have any form of investment. And one thing I've also noticed as working as a portfolio manager is these rich people, they sweat their money a lot. Any money they are making, they always ensure that the money is, generating something for them rather. And I mean, there are other quotes here that I'm not even going to bore you with. Things like, wealth is not about having a lot of money, it's about having a lot of options. So it's more like, even if it's 5,000 naira you have, at least you have different investment options whereby they're available to you that you can pick from on. Okay, this is where I'll put this is where I'll put that, etc. I mean, that's by Chris Rock. Then another quote here by Robert Kiyosaki saying, often the more money you make, the more money you spend. That's why more money doesn't make you rich. Assets actually make you rich. So that's it. I hope that has been able to spark something in you. So that being said, yes, financial investment strategies, but one of the things I always like to do is make people paint a big picture for people so they are able to see the numbers. And from what you can see on my screen here, I just have like a very rough templates on the numbers. Oh, if you invest $25 every month, $25 every month at, at an interest rate of about 8% for 35 years, how much would you retire with when it's time to retire? Is over $50,000. So for context sake, because we're in Nigeria, right, $25 is just about 32,500 naira. It doesn't mean that's the benchmark. Your benchmark can be 5,000 naira. But what I'm just trying to make you see here is that if you are consistently investing 32,500 naira, which is $25, after 35 years, the $25 would have grown to over $50,000. And if you look at it critically, the total contribution that you have invested in whatever investment you've done is just about $10,500. So that means you are getting over $30,000 in $30,000 as your investment returns. I mean, over 370% growth. This is just like, something to just make you picture is that, okay, I have two options. You can decide to say you put your money in the bank and it's not earning anything for you. Or you have a second option, which is, okay, the little money that I'm getting, let me put it in something, no matter how little. So at least it's generating something for me. I'm sweating it. So this is the power of investing and compounding. So that being said, I've said a lot of things to just, spark a lot of interest in you, in letting you know that investing is key and all. But before I even dive more into the different investment options, recall I said that there are two critical things that are very important. In fact, I always like to tell people that always see yourself as a business. See yourself as a business. And what businesses try to do is see, how can I grow my income? How can I reduce my expenses? But before you can even get to that level, you need to know the income you're making. You need to know how much you spend as expenses on a daily, monthly basis. So that way you're able to know how to grow the income and whether you need to reduce the expenses or not. And that is where budgeting comes into play. Now, what is a budget? In simple terms, it's just a sheet or it's just a document that shows you how much you're earning, income, how much you're spending, expenses. I have a lot of quotes on my screen, like, okay, personal budget is a manifestation of my decision to, grab my finances by the ball. In fact, this is where I'm actually going to break a lot of tables. I've heard people say things like, because you have a budgeting, or people that budget are stingy people. They're guns. They don't like to, give and things like that. But I always say that That's very, very incorrect. People that budget, when you see a person that budgets, it shows that the person is very intentional about everything that concerns them. Because a budget is basically you just telling your money, this is where your money should go to. It is a roadmap, right? Giving you direction. This is where your money should go to. This is what, and there are also other myths that I get from people. Myths like, people saying that um when you have a budget, you're unable to, enjoy life. Okay, maybe enjoy life is not the word, but enjoy yourself, spend on things you love, etc. But I disagree. Recall I said a budget is a roadmap. And anybody that knows me very well knows I work hard, I save, I invest. But one of the things I don't joke with is splurging, like splurging. So I make sure that because I feel like you work so hard, and no matter how little the money is, you just need to set something aside to just, tell yourself, well done. I get the part of delayed gratification, but this is where budget now helps you plan, because your budget is okay. This is how much I have. This is how much I can spend. So if it's 20,000 naira you're getting every month, or 50,000 naira, 100,000 naira you're getting every month, you're able to, okay, I can only afford to spend 1,000 naira on, let me say, buying snacks to, just tell myself, well done. And aside from that, that's all. So all the myths you can think about, budgeting, I'm just here to tell you that all those myths, they don't exist. All those myths, they don't exist. So like you see on my screen, I say a budget is what telling your money where it should go. A budget tells us what we can't afford, but it doesn't keep us from buying it. So a budget, okay, you can't afford this thing. It's like, just show yourself. This is your report card. Like, don't deceive yourself. Don't try to impress people with the money you don't have. Like, be yourself. Be yourself. Now, I think another thing to also mention here is I'm going to teach you people a lot of things, but I feel like I'm also going to come from a different perspective, which is I like to tell people, because you're just starting your career, right? I always tell people that, first of all, personal finance, there's a reason why it's called personal finance. It is called personal finance because it is your own finance, right? It is your own finance. Don't try to put yourself under any form of intense pressure of, okay, oh, because people are doing XYZ, you too, you must do XYZ. There's nothing that should I say ticks me off than people just trying to, I want to belong. No, there's no need. Just do you. This is where you are. This is what you can afford. Oh, I cannot afford to enter Uber. It's a bus I can afford to enter right now. Right? Then with that, you're able to plan, okay, I cannot continue to enter a bus every time. What do I need to do? Do I need to upskill? So when I upskill, I'm able to get a better job that is able to pay me better, and I'm able to make more money. So I'm saying all of that to say that in budgeting as well, always be true to yourself. So that being said, there's a very popular budgeting rule that people use, 50, 30, 20. It's simple. What they're basically just saying is every amount of money or every income that comes in for you every month, you should always divide it into percentages. I mean, this is just the standard rule. Remember what I said about your personal finance is your personal finance. When I started my career, I don't think I was doing 50, 30, 20, right? And I think it's just the peculiarity of where I was then. Now, the normal 50, 30, 20 is saying 50% should go to your needs, 30% should go to your wants, 20% should be used saving for your financial future. And if you look at it, what are things that people will typically put under their needs bucket? There are things like housing, transportation, everything that you can see on my screen. That's what they'll put in their needs bucket. Wants bucket, you can see it there. Financial future bucket, you can see it there. But if you also look at it critically, especially when you're starting your career, right? There are two things that will either happen. Maybe you're staying with family and friends, and so you might not necessarily have to spend so much on housing. Another scenario might be, okay, you might actually be spending so much on housing, but in this case, maybe you're just squatting rather with somebody. So yes, this is a standard rule. It doesn't mean you must adopt it. It's a standard rule to guide you, but sit down. Like, just take a paper, biro, or you take Excel, put it there. Income, expenses, plan in percentages. Oh, this is how much I'm receiving every month, 50,000 naira. Put it there, income, 50,000 naira. Where am I currently? I'm just starting my career. When I started my career, the things that were really priority to me were, getting equipped skills-wise. So I didn't even have a lot of money for investment at that time. But what I ensured I did was, no matter how little, I ensured that at least, even if it's 5,000 naira I can invest every month, I must make sure I do it every month. So that way I'm able to build that discipline, such that even when I start receiving higher amounts, it stays with me. I am consistent. So I'm saying all of that to say that sit down with yourself and just reflect. Like, how much do you have? What should go to your needs? What should go to your wants? What should go to you just saving money? You don't have to use 50, 30, 20. If it is 20%, I don't know, 20% to your needs, maybe 60% to your wants, and maybe the rest to your financial future that would help you, you can put that. But remember what I said. Things that are very important to people starting out their career are things like, okay, how can I invest in my skills? Because if I invest in my skills, I become more valuable. People are willing to pay me more money, because at the end of the day, money is attracted to value. And I say it anywhere, everywhere. Delayed gratification is also very key, because definitely you will not have a lot of money to play around with, which is why upskilling is now very key, right? Because upskilling is, okay, I put my money, the money I'm supposed to use to, let me say you have 100,000. So if I had 100,000 naira starting my career, the way I would literally put or deploy the 100,000 naira is, definitely I'll be living with my parent or something, right? So I know I'm not spending money on housing. But what becomes a need to me personally are things like transportation, because definitely I have to go to work, right? Number two, a bit of contribution at home. It's a need, because I don't know, it just depends on how you're brought up. But the way I was brought up, at least you must always put something down, no matter how little. So definitely that will go into my need bucket. Another major need that would go into my bucket is which certificate should I be taking? What skills do I need to? Because you have to pay. Some are free, some you have to pay for them. That will go into my needs bucket. Then wants, okay, nice to have, but I don't necessarily need to have it. Yes, maybe so. So my splurge will always go there because I work hard. But let me say my wants can just be like 10%. So it's more like my needs can be getting like 70%. Want is getting like 10%. That's 80%. Then the remaining 20% to your finances. Or your needs can even be getting 90%. Needs 90%, want 5%, financial future 5%. Because don't forget what I said. At the end of the day, you want to ensure you are very valuable. So so that we're able to make better investment decisions. So this is technically the budgeting rule. This is the standard, but like I said, it's personal finance for a reason. Don't put yourself under any form of pressure because someone has said, bring 50, 30, 20, so you must do 50, 30, 20. Sit down with yourself, self-reflect. Where am I? What can I do now? What can I do now? When you get that picture, it also helps you. 1 year from now, I don't think I want to be doing this. I need to go and get more skills so I can upskill. These are things that have helped me that I'm really sharing with you. So that's basically the budgeting rule. So that being said, we will now move properly into the passive investment option side of things. Remember, I told you that from the income leg, remember I said you see yourself as a business, there's income, expenses, then we get what, are you making profit or not, if you are seeing yourself as a business. And from the income leg, there are active generative sources, there are passive investment generating sources. For the active, I've told you, you find things like your salary there, gifts from people. In fact, gifts from people might not even really be active, but let's put it under active. Then passive investment options, this is where passive investment option comes into place. Now, before I speak on investments, there's something I always like to say, which is very critical, and it drives investment in general, right? And is what we call risk. You cannot talk about investment and not talk about risk, right? You cannot talk about investment without talking about risk. And there's a general rule of thumb that says the lower your risk, the lower your return. It is uniform everywhere. So if you're someone that you don't like taking a lot of risk, definitely you should, if you don't like taking a lot of risk, you should also not be expecting higher returns. You should be expecting lower returns, right? So the lower your risk, the lower your returns, the higher your risk, the higher your returns, and vice versa. Right. But before I even jump really well into this thing, I think it's also very important to highlight a couple of things, because we're in Nigeria, right? And being in Nigeria, there are certain, like, I'm an economist, so there are certain like macroeconomic variables that you always need to pay attention to. So things like inflation. What is inflation? Inflation just basically means rising prices. So what you would have used, the quantity you'd have been able to purchase with 100 naira, let me say 10 years ago, if you go to the market today with that same 100 naira, you will not be able to purchase the same quantity. Or if you want to purchase the same quantity, you will not be paying 100 naira for it, you'll be paying a higher amount. That's inflation, rising prices. Now, currently in Nigeria, I mean, if I don't let me go all with the terminologies, what I'll just say is that in Nigeria currently, we have double-digit inflation. So I know the inflation rate is either close to 20% or around 20% thereabout, right? And inflation is like a thief. It's like a thief, right? Because it means that if I have 100,000 naira and I just leave it in my bank account, in 2 weeks' time, 3 weeks' time, I go to the market, I want to buy something. The price has increased. It means the value of that 100,000 naira has what? It has reduced because things are now more expensive. So how can you help yourself so that at least you are getting something? So whatever you might be getting might not be able to match up to the price increase that you might see everywhere, but at least you are getting something no matter how little, because it's better than putting your money in the bank. I'm not saying you should not put your money in the bank. It helps you, but you also need to always factor things like, if you put your money in the bank, there are a lot of charges. SMS charge, this one charge, that one charge, plenty charges. So it's very important that you must sweat this money to give you something. So that being said, I've been able to establish the fact that, the prices of things keeps, getting really expensive. So you cannot afford to just leave your money in the bank, right? So definitely you have to invest, which is putting your money to good use, making your money work for you. Number two, I've established the fact that before you say you want to even invest, risk is very critical. So you need to sort of like know the kind of person you are when it comes to taking risk. Now, when I talk about risks, there's two sides to risk, two sides of risk taking, right? And they are, number one, the willingness to take risk and the ability to take risk. The willingness to take risk is different from your ability to take risk. The combination of willingness plus ability is what shows you your true risk metric. Now, willingness to take risk is, I don't mind. The equities market has done over, or the equities market returned over 50% last year. Currently, the equities market is booming. People are making over 1,000% returns, etc., etc. I want to put my money there. I want to take that risk. I'm willing. Most of the times, we have more guys being, very risk aggressive. Yes, it's either they go all in, or they go out, they are not there. Most of the time you see guys play into that category, while ladies usually sometimes are more conservative and things like that. So that's willingness to take risk. Ability to take risk. Sorry, someone trying to say something? Let me just check the chat box. Okay, I think there's a way I can actually do this. I have the chat box by my side. Yes, I figured it. I'm not sure. Okay, someone is asking if the presentation would be shared. Definitely, we'll share the presentation with you. Yeah. Yes. So ability to take risk is telling yourself the truth. How much do I make every month? What are my needs? Things I cannot do without that I must pay. After you put the needs together, oh, do I have, let me say, somebody I need to, always give money to every month? Maybe my parents or something. They must be on my payroll every month. You put everything. By the time you put everything together, you look at it. How much do you have left? Emergency fund, have you factored all those things inside? By the time you put all those things together, do you really have money? That is ability. Ability to take risk is more objective. It tells you if that money goes, will you be okay? Will you be okay? Or you're going to have high blood pressure if the 100,000 naira you put has now become 50,000 naira? Because the 100,000 naira you put there, you had slated that money for one exam that you have to write. So that is ability to take risk. So by the time you combine both together, right, it shows you your true risk metric. So that being said, we have different investment options also based on this risk type. So we have the low risk investment options, and we have medium risk investment options and high risk investment options. So I already said the background that low risk will give you low returns. So examples of low risk investment options are things like fixed income instruments, or should I just better say money market instruments, money market and fixed income instruments. So fixed income, just by the name, is an instrument whereby you are getting an income that is fixed. And the major objective of money market and fixed income instruments is what we call capital preservation. Nothing must ever happen to my money. Yes, so I want to grow that money, but nothing. If it's 50,000 I put there, that 50,000 naira, it must not reduce. So you are getting a fixed income. Example, placement in the bank. You have banks literally offering, okay, come on, if you invest your money here, you get this particular return. Is fixed. We have other money market instruments, things like treasury bills. What's treasury bills? Treasury bills is basically just the government coming to you to say borrow us money, and they'll give you a rate for it. Now, usually before you buy treasury bills, the lot size is like 50 million, 100,000. I'm going somewhere. Just stay with me. Don't let me lose you. I know we are just career starters, but stay with me. So that's for treasury bills. You have commercial papers. Commercial papers are basically just businesses coming to you to say, we need money because we need to, do a lot of capital projects that will help grow our business. And they say, please, borrow us money at this particular rate. Usually for things like that, the minimum starting amount are things like 5 million, etc., etc. So, one major issue you typically have with all this, size, this investment starting amount, is the fact that not all retail investors are able to purchase things like this. So when I mean retail investors, people like, they just have like 100,000 naira, 50,000 naira, 5,000 naira. Most of the times they're unable to, purchase things like this. And that's why, we have things like, mutual funds, right? Examples of mutual funds are things like money market mutual fund. So a money market mutual fund, for instance, is basically just a mutual fund that is invested in money market instruments. What are money market instruments? They are instruments which, tenors of like, instruments with tenor of like 1 year or less. So there are those things I mentioned before: treasury bills, commercial paper, fixed deposits, etc. So the objective of the mutual fund is that they would, the portfolio manager literally collects funds from different investors. Mind you, the mutual fund must be registered by the Securities and Exchange Commission because you are in Nigeria. So that's one thing you always have to look out for. So as I'm highlighting these things, I'll tell you things to look out for before even purchasing it. So the mutual fund has to be registered by the Securities and Exchange Commission. They are the regulatory body that oversees all portfolio/fund manager, basically the capital markets, technically. So it has to be regulated by the Securities and Exchange Commission. So the money market mutual fund basically just pull funds from different investors, and the minimum starting amount for the money market mutual fund is 5,000 naira. So what it does is that for people that cannot invest in commercial paper, they cannot invest in treasury bills. By investing in the fund, the portfolio manager pulls all the funds together, and they are able to buy these securities that retail investors or you and I might not be able to typically buy. So all those things like treasury bills, commercial papers, etc., they are investing in all those things for you, and they are taking the stress off you. You don't have to be thinking about, okay, how do I, what should I? No, they are doing all the research, making sure that they are buying good instruments into the portfolio. And this is where I also need to now highlight. Now, because I work in the industry, I know that the SEC has mandated that if I'm not even mandated, when everything started, they mentioned that all portfolio managers must ensure that they rate their money market mutual fund every year. Now, the advantage of rating the money market mutual fund every year is that, investors, the rating gives investors an idea of how safe the securities, the fund manager or the people managing those investment mutual funds, it gives investors an insight into how safe the instruments they are investing in is. So when you see most of the times that, oh, this person is rated AA or something like that, definitely there are a lot of things that cover it, like, okay, do they really have the professional management expertise? Then number two, are they investing in extremely risky instruments that, might affect my fund? Because don't forget, I said the major objective of this money market mutual fund is capital preservation. So the rating just gives, investors an insight. Oh, they are not taking, they are being conservative. They're not investing my money in instruments that are too risky, because they are trying to ensure that they, get good yields. So these are things that investors need to always pay attention to, right? And there are different, we have a lot of asset management companies in Nigeria that you can always reach out to buy a mutual fund. I work with Vertiva. So yes, Vertiva Capital Management Limited. There are other ones, Zcrest, there's Coronation, there's Stanbic. Do your research on which one works for you. There's also Cowrywise that, warehouses some of these, mutual funds. So Cowrywise is definitely, I'm not advertising for them. Mind you, this is just a financial literacy session. So yes, Cowrywise warehouses most of this money market mutual funds. So that way you're able to purchase, them seamlessly. So if you don't want to go to those asset management companies, you can just buy it off, Cowrywise. So that's for money market mutual fund. Then aside from money market mutual funds, which falls under the low risk category, I think I can now move to the next risk bucket, which is the medium risk bucket. So for medium risk, most of the time you find things like equity mutual funds, or you find equities. In fact, some people categorize equities as high risk. So I think the categorization as well now also determines or depends on what your portfolio is looking like. When I'm saying portfolio is basically just like all the investments you've done. Basically just you putting all the investments you've done in one place. That's portfolio. So when you look at all the investments you've done, oh, if this one goes up, am I okay? oh, I have like 5 investments, maybe one money market mutual fund, this one. So it sort of gives you an insight into, where to actually categorize it. So now, speaking about equities, what are equities? Equities are basically just ownership in a company, right? Ownership in a company. Maybe before I mention that, I know for the money market mutual funds, currently they are doing the rates on those money market mutual funds are things like it changes on a daily basis because investors are buying into it every day. So the rates currently is usually within like 15 to like 19% thereabout. That's per annum. So another thing to also mention, except otherwise stated, when people quote rates in the financial market, it's usually quoted on a per annum basis. Yes, Paul, you can unmute yourself and speak. I see you have your hand raised.
All right, thank you so much, JT. Just we dropped some message for you in the chat box. Could you please
Okay.
look at it? Thank you so much.
Thank you. Let me just look at that. Oh, perfect, 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 perfect. So I literally have 5 minutes. So guys, I have to rush this. I literally have a lot of things to say, but I'm going to have to rush it so I can take questions and answers. So equities are basically just ownership in a company, right? And there are underlying asset backing them. When I mean underlying asset, they are businesses. So take for instance the equities we have in Nigeria. You can have equities of banks, right? How do banks make money? They take deposits from customers, and when they take the deposits it's one of the ways. When they take some of the deposits from customers, they can invest in different things, financial instruments, they make money. What do banks do? They give loan to people. When they give loan to people, they charge a particular interest rate. Those are ways they make money. What are different or other equities that are available in the market? Things like, let me say, you have MTN, you have let me say an equity that is invested in agric, right? There's something backing it. There's a business that is backing it. So in as much as you see price movements, when I mean price movements, they are volatile. The price changes on a daily basis and is a function of demand and supply. So if people feel like, okay, this stock is undervalued, right, and this company is really good, they are churning out very good numbers, they can decide to purchase. Now when a lot of people are demanding for it, and the people that want to sell, they are lower in the market, what happens? Price goes up, right? The price that went up can also come down. So it's volatile, it changes on a daily basis. However, because there are underlying businesses backing them up, most of the times, I always tell people when I compare equities to crypto, it's always equities for me, because I see a substantial business that is backing that particular equity. So what's now most important is determining how to or which equities you should use. I always tell people to start from the things you use. A lot of people they are using MTN, Airtel, and MTN will charge you recharge your phone for XYZ, you buy data, all those things, you give MTN free money, and you've not gone to buy their stock. How? It's not possible. They are taking money from you. You should be making money from them as well. So that's a very good way to start. Number two, Nestle. There are people that make use of, they drink Nestle bottled water, all those things. If you can drink all those things, I see no reason why you should not be invested. So whatever you are using, try to see how you can invest in them. So as they are taking money from you, you can also be making money off them. There are also other ways and other things in which you should actually look out for, but I can't cover that in this session. What are ETFs? ETFs are called exchange traded fund. It's a fund that is traded on an exchange. We have different exchanges in Nigeria, everywhere, like Nigerian Exchange Group or Nigerian Exchange Limited. We have New York Stock Exchange, etc. So what the ETF does is, it is a fund. It is either it has a basket of equities inside that fund and is now listed on the exchange. Then what is it now doing? Is now tracking is now tracking a particular index that has an objective of, I don't know, depending on whatever the objective is. The objective of the index can be, okay, just track the banking sector. So the only thing that will be there will be banking stocks. It can be just track the consumer goods sector. So the only thing that will be there will be the consumer goods stocks. Track industrial sector. So that way, if you want to have exposure to the banking sector, you don't have to go and be stock selecting. Oh, which stock should I buy? Oh, which stock should I buy? You can just buy an ETF that tracks the banking sector. Now, there are different ETFs that are available. I know there's Vertiva Banking ETF, there's Vertiva Consumer Goods ETF. Then there's something we also call the Vertiva Green 30 ETF. Not just that, I don't know if I should, there's also another ETF that tracks the top 30 stocks as well on the exchange, right? So all these things are basically there. What else do I really need to touch on? There's REIT, Real Estate Investment Trust. Those ones as well, they are also traded on the exchange, right? So I'm having to rush up because this time is short. You really cannot talk about financial strategies in such a short time. So I think everything on this slide, I've touched on it: money market, treasury bills, etc. and all. So another thing I also always like to mention is the fact that you always need to diversify. I tell people, don't just invest in one currency. Invest in Naira, invest in USD. So at least if anything happens, you are okay. Now we've seen that the Naira has been appreciating from like 1.5 is now around 1,300 Naira. Right. So just try to take positions right in different places. So that way it reduces your risk on an overall level. In summary, there are different platforms you can reach out to if you want to buy anything. You want to buy money market mutual fund, you want to buy a treasury bill, you want to buy a stock, you want to buy ETFs. In fact, if you need stock recommendations, asset management firms offer it. Sorry, stockbroking firms offer stock recommendations. There are different ones. Vertiva, Scodros, Coronation, different. Do your research, right, before making an investment decision. So I think that sums it up. But I think the final word that I would say before I yield the floor to whoever is going to moderate the Q&A session is the fact that I was just thinking about it, and I got married last year, so I was telling my husband that I don't think I have any regrets financial wise, right? And since this is a session for professionals that are just starting, I would say don't put yourself under any form of financial pressure, right? Invest is very key, but at your pace. Also, when you're starting out your career, I don't believe that your major focus should be you just investing the 100% you are earning into financial assets. That's all this investment we've mentioned, right? I think what you really should be focusing on is ensuring you are upskilling, like, seriously, to grow your value so you are able to invest more in those assets. I'm not saying don't invest. I've not said that. Invest so that way you're able to form the discipline. You can be disciplined enough to keep investing. That one is very key. It has helped me. So from the little 70,000 naira I was earning when I was doing NYSC, I make sure, even if it's just 5,000 naira, and everybody that knows me, they know I don't joke with budget. I don't joke with budget. So when my mommy comes to me middle of the month to say, XYZ, she'll be like, I said, Mom, there's nothing, because I've, pushed everything everywhere. Definitely, I always make sure I put my parents in my budget. It's key. So don't put yourself under any pressure. Invest, right, so that you are able to form that muscle of ensuring you put something aside every month. Number 3, there is opportunity in every news that is out there. There is opportunity in every news that is out there. So be curious. Want to know more about the news. Try to know more about the news, right? What's the news saying? etc. So that way you're able to know how you can position to invest no matter how little. Fourth thing I've said, try to upskill, because money chases value, and that is what has helped me. I try to build myself. I don't try to pretend to be somebody I'm not. I don't. I don't know it. I don't know it. Let me get the skill and upskill. So that way, I'm able to invest more in things that will generate me money. I hope I've been able to, just help shed some light and not confuse you on a couple of things with respect to investment. So now I think I'll yield the floor to the moderator for the Q&A. Thank you so much for having me.
Thank you so much. Thank you so much, JC. I believe that everyone else, including myself, really enjoyed this, and there's so much to learn from this, and we're definitely going to be able to look back at what we have learned here, and also be able to tap from your wealth of knowledge and actually like navigating through this financial space, which is actually very important for every one of us, even especially those, especially also who are like young professionals trying to get our feet, right on the right path. Thank you once again. So, thank you all for listening. Definitely believe that you've learned a lot, including myself, and I'm sure that you have lots of questions. Sparks you a couple of questions already. So, if you have some questions, we'll be able to entertain them. So, by way of handling this, we would want you to do it in an orderly manner. So if you just signify by raising up your hand, and then I would be able to call on you to ask your questions. Also, for some of us who may be in very busy environment, maybe some of us on the field or trying to get home, get our ways, you can actually still post your questions on the chat box as well. You can read them out so that JC will be able to answer your questions. So you can go ahead to raise your hand and then also drop your questions in the chats as the case may be. So before, okay, sorry, was that a question? Okay, someone is asking if we can connect with you on LinkedIn. Yeah. This, if you're speaking, you're muted, so can't hear you.
Yes, so I was saying yes, please feel free. I don't do much with respect to churning out a lot of content right on LinkedIn, but it's one of the things I work on. So please feel free to connect with me on LinkedIn. I also have a couple of resources with respect to things I've done, sessions I've had. I think you'd see that on my LinkedIn page as well. So yeah, I'm happy to connect.
Thank you for that. So you can reach out to them. So we also have Lucky's hand here. Lucky. So we'll go in that order. After Lucky, then we have Ijama also, and also I think there was also one question from the chat box as well, which I'll read that. So Lucky is here with us, our YP chair of SPY section. Lucky,
Hi,
go ahead with the question.
can you hear me? Good.
Yes, we can.
Okay, thank you very much. This was such an insightful session. Thank you very much to our delectable speaker. So my question is, I realize that from your presentation, you didn't dwell much on physical investment on properties and physical assets. So I would like to get your opinion on what you think about such investments. I know you mentioned um, the the type where you have to invest in real estate companies and all of that. But what would you advise in terms of investing outside such companies for physical properties?
Okay, I think I can take the question, right? Or do you want us to take all the questions? Jude, are you there? Can you hear me? Am I muted?
We can hear you, ma.
Okay,
Yes, we
so I
can hear you. Please
can
go ahead.
respond to
You
the
can take the
question.
question.
Okay, yes. So I didn't really dwell on real estate, but I had it on my slide. So I think real estate is a very good investment, but it's a very good investment that appreciates. And aside from it appreciating, it also helps you diversify your portfolio. So it's different from typical things like equities, mutual fund. It's physical. But while you're looking at the advantage, which is okay, yes, it helps me diversify my portfolio and it's not so risky. You also need to look at the disadvantage, right? Real estate, that's things like physical properties, and so they are not so liquid. It doesn't mean that it doesn't appreciate. It appreciates, but they are not so liquid. So I think what's very, very key is know when to position, right? Know when to position. And there are also certain things you need to put into consideration before making a real estate investment option. Definitely the location, 10 years from now, like, do you think people would, want to sort of like, invest in that particular area? Because there are different things that also helps contribute rather to the appreciation of a real estate property. When you have, let me say, the government goes to maybe develop an airport or one port there, definitely will help development, and you would see appreciation in that regard. So I think I didn't really dwell much on that because I'm just like, okay, career professionals, like career starters, these people are just starting, like, and most of the times for people that are just starting, I'll hear things like, okay, I'm like earning 100K, 200K, and you want to buy, a very good land. I'm not sure you might be able to get, something really good that would, gain really good value at that price. So I think that was why I just stuck with more cheaper options that people that are just starting their career can, dabble into. Another thing I know people do aside from, just the housing side of things is, they just buy land and, they get someone to, cultivate the land for them. So that way they're able to maybe plant and, sell it off. That also works. I think at the end of the day, just do what really works for you, but make sure it's very key. You do your research. Make sure you check because there are a lot of omonile issues when you talk about real estate and all. So make sure with you're buying with a good person, not just even buying with a good person. Make sure that you are seeing the documents. Whatever deed needs to, contract or agreements that surrounds or guide ownership of that property. Make sure everything is well handed over to you. Not that they are giving you another person's property that has already been sold to, another person. Then another thing um, I also, I think is also very critical for real estate is also going with your lawyers, right? Someone who actually has solid knowledge on real estate. So they could also help solidify whatever research you've done with whoever is selling the land to you. Because we have a lot of omonile issues for real estate. We've had the government demolish some people's property because they weren't legally acquired and all those things. Does it mean real estate is not good? I'm not saying real estate is not good. It's good, but with the advantages, with the disadvantages, and make sure you are diversified on both sides, right? And don't forget what I said, real estate is quite illiquid. So when it's time for you to sell, you might not immediately get a buyer, right? But it is one thing that will help diversify your portfolio. It's different from the typical equities, mutual funds, etc. So I hope I've been able to help you, but that's the 10 cents I can, give you on real estate.
Yeah, that was helpful. Thank you very much. Thank you.
Yeah, thank you for that. So, Ijama, you may go ahead to ask the question, and then I'll read the two questions that we have from policies.
Okay, good evening, everyone. Good evening, Miss Jesu Shetutu. Please, I would like to ask on mutual funds, especially the dollar mutual funds. Last year, I think it's about 8 months ago, I invested with Cowrywise. I invested about $10 in their dollar mutual fund. So I watched my investments, so like the returns or more like the gains weren't really impressive for up to 3 months. I was seeing about 0 point something percent. Yeah, but currently it's about 2 point something percent. Yeah, but before I did okay, at the moment, I think they said something YTD. I don't really understand the meaning of that, but they said YTD is about 2.57 thereabouts. Let me be sure, please. Okay. Yeah, they said the YTD is 0.6 rather, 0.6% returns. So I don't really understand whether I didn't really understand like although I think it was better than this when I first made the investment, which was what spurred me. But at the moment it's 0.67. But right now my gains is just 2.1% thereabouts. So I don't know, and it's been 8 months. So I don't really know whether that's how it works. Or because you said something about 9%. You said 9% per annum also. Please can you shed more light?
All right, thank you very much, Ijoma. I was also going to highlight, if you don't want to call me J-Shot, you can call me JT. That works. I take that with my full chest. Now, back to your question. What does YTD mean? YTD means year-to-date returns. It means that if, just a very good example, today is 13th of February. So it means if you invested, let me say, $1 in that particular fund on the 31st of December. Now I'm picking my words carefully because for dollar funds generally, they have prices that are changing on a daily basis, right? They have prices changing on a daily basis. I don't know the price at which you entered that fund, right? But to explain year-to-date return, mind you, this is just for the year-to-date return explanation. I'm saying if you invested $1 in the fund on the 31st of December 2025, it means that today that $1 would have grown by, you said year-to-date rate to return is 0.16. So the $1 would have grown by 0.16%. So year to date is basically you just picking the last day of the previous year and comparing it to the current date. So that's why they say year to date, where you started from at the end of last year to date. What is the return? So you calculate what's the price of the fund now divided by the price of the fund as at that 31st of December minus 1. The normal way you calculate like returns. So that's year-to-date returns. Now, to address your question on the return. So when I was explaining mutual funds, I referenced majorly money market mutual funds, saying that money market mutual funds, which are the Naira mutual funds, not the dollar ones, they currently they are doing like around 16% to like 18, 90%, 20%. And don't forget what I said. I said when I per annum, I mentioned per annum, and I said whenever in the finance industry, you need to know that it is so whenever we mention percent in the financial industry, we are quoting it per annum. So what am I trying to say, right? It means that, so let me say if someone is saying a money market mutual fund is doing 20% and you want 20% per annum and you want to calculate the return. How do you calculate the return? You calculate the return by doing 20 divided by 100 times, let me say it's 100,000 naira times 100,000 naira times, so let me say the person has stayed in the fund for, let me say 30 days, right? It will be times 30 over 365. So you prorate it. That is what your return is going to be. It's not like it's going to be 20% flat. So that is how to calculate returns. Now to move to dollar fund, which is where you really have an issue with. Dollar funds are medium risk instrument. And the reason why I call them medium risk is because the portfolio manager is investing in instruments. So they're investing in things like, foreign euro bonds. What are euro bonds? Euro bonds basically just means, to bring it home, Nigeria can come to you to say, oh, they want to borrow money. But now they will not be borrowing money in Naira. They'll be borrowing the money in another currency. So if they decide to say they want to borrow the money in dollars, right? And they're not just borrowing from Nigerians, they are borrowing globally. We call that Eurobond. So most of these dollar mutual funds, they are invested in things like Eurobonds. Now, our regulatory body, the SEC, they come up with a regulation like, 2 years ago, saying that these funds, these dollar funds, right, that people invest in, portfolio managers must, ensure that they are marking that bond to market. Now, what am I trying to mean? What am I trying to say? These Euro bonds that they are purchasing, they have prices. The same way you have stocks that have prices and the prices are changing on a daily basis. The Euro bonds also have prices that are changing on a daily basis. Now, whatever price I don't know all the Euro bonds that are in their portfolio, but whatever is the average price of the Euro bond, definitely they will not only invest in Euro bonds, they can do fixed deposits here and there, because fixed deposit is more capital preserving, right? So by the time they do whatever they did on Euro bond plus their fixed deposit minus the expenses, because the fund is subject to expenses, right? Whatever is the net is what you're going to have, and it will be changing daily. Now, for the dollar fund, you might have noticed today, like you said, it can be 0.1 to 2% today. Tomorrow, it can be 2%. It means that if the prices of the Euro bond, right, in the portfolio that, the fund manager is investing in, if it's increasing, your returns will be increasing. If it's reducing, your returns will what? It will be reducing. So by the time you decide to say you want to sell that fund, definitely, to get the gain you've actually made, you now do your selling price minus your cost price. That's the way you're able to know whatever gains that you're able to make. However, I think it's also important that I also highlight that there are certain things that investors also need to pay attention to. Now, before you invest in any fund, even on that carry-wise for the dollar fund you have invested in, there's something called asset allocation that would always be there. Right? So the asset allocation basically just tells you what the fund manager is going to be investing in. Now, you can have a dollar mutual fund whereby the fund manager is saying that they would invest in things like equities, they would invest in things like fixed deposits, they will invest in things like Euro bonds. You can have another dollar mutual fund where the fund manager is saying they will invest in maybe just fixed deposit. No, they will usually call it fixed income instruments or fixed deposits. Now, if I put two by the side, remember I told you equities are higher risk. So you should know that that the dollar mutual fund that has equities, Euro bonds, fixed deposits is more risky than the other dollar mutual fund. And you will see these things in what I call asset allocation. The fund manager would always put an asset allocation. They will say, they will do 0 to 20% in equities or 0 to 20% in money market instruments. Go back and check that carry-wise. You will see it there. Usually, they will have it in a pie chart as well. Then they will not say, click here to read more. But the issue is most investors don't read that. They are just after, this is doing 10% today. Let me just jump on that 10%. But I think summarizing everything and bringing it home, right? For the dollar mutual fund, number one, you need to look at the asset allocation of the fund you have invested in to see whether it is more risky. It will be more risky if it has equities inside it or if it is less risky. Number two, you need to know that dollar mutual funds generally, their prices change on a daily basis. So when you decide to say you exit, that is when you know whether you are making a loss or you're making a profit on that dollar mutual fund. So what should be very critical to you should be your entry price, your exit price. Number three, which is also very critical, is that there are some dollar mutual funds that pay distributions. Now, what is distribution? The fund manager has done their valuation. When I mean valuation, they've computed all the assets. When I mean assets, the investments they bought into the portfolio minus expenses, and they've been able to realize that there's a maybe gain on that investment. And then I say, because you invested in the fund, though, we will give you this particular money to say thank you for investing in the fund. That is the simplest way I can explain distribution to you. There are some dollar mutual funds that pay distribution. They can pay once in a year, they can pay twice in a year. Right? So it is knowing if the dollar mutual fund you invested in pays distribution and how often do they pay distribution. Do they pay it half yearly, or do they pay it once in a year? So by the time you put all these things together, it helps, just I think I already explained year to date. Year to date, I think already that was why I started with. So Ijoma, please, I hope I was able to give you more clarity. Do you need me to clarify any other thing? I hope this was helpful.
Okay, thank you so
Yes,
much.
you
Ichema dropped the chat in the box. She said yes, it was. So thank you for that detailed response. I believe there are lots of us here also listening, and those silent ones also got something up there also. Thank you so much for that. So if we have one more question, so that will be the last question, so that we can quickly wrap up the Q&A section. So Kalisus had two questions, so I'll just read them through. I believe that some of your responses must have touched on them, but just like a way of covering that as well. So I'll read through. So kindly, thanks so much for the insightful section. Kindly, what are your views on emotions versus risk? And it goes on to also add, what's a good finance scaling roadmap that has worked for both you and the clients you've worked with, especially for low income earners? So we'll just be able to attend to this final question so that we can wrap up. Thank you.
Okay, let me see who asked the question. Callistus, right? Okay, Callistus, thank you for this question. So what are my views on emotions versus risk? I will say risk captures your emotions. That's risk. Risk. It captures your emotions versus reality. Right? Now, me saying risk captures your emotions versus reality, I'm tilting more. Remember when I started the session, I said for risk, two things are very important when you're talking about risk. Willingness to take risk, ability to take risk. That willingness side of things, that is like your emotion. Yes, I want to do this. I'm not afraid. I'm not afraid to actually take like I want to go. I want to go. Ah, I can't take that risk. Oh. Ah, I'm scared. That's your emotion talking there. Willingness. So the willingness to take risk basically exposes your emotions to you when it comes to money making decisions. Then risk now further goes on to say, aside from emotions, so there's the reality side of things, which is the ability to take risk that I highlighted. That is basically, guy, you need to put yourself back together, right? What are you earning? Are you sure you can go and buy stocks that, the price will be 10 naira today, tomorrow is 2 naira? Are you sure you have that money with all the obligations that you have currently that you need to, you need to foot? It literally just, puts you into reset mode. Another thing as well that is also very key, like your emotions can it can deceive you, and your emotions will tell you a lot of things when it comes to money generally. There are people that will feel like they are not selfish or they are not greedy. It's not selfish, greedy is the word. They are not greedy, right? And when it comes to investments, the investment decisions they make show whether they are greedy or not. Because take for instance now, someone can come and say, oh, they want to invest 100,000 naira in the stock market, and they tell you that once this thing has done 30%, please sell. Let me at least make extra 30,000 naira on it. Go. But you know what some people will now do? When they see that the prices are going up, they are going up, like, no, please, I'm not doing that. Don't take profits from me at 30%. Let it keep going up. Let it keep going up. Let it keep going up. So it will really test whether you are greedy or you are not greedy. And in this financial markets, you have to call a spade a spade. If you say what you want is 30% profit, take that 30% profit. At least save your capital first. Then if you now say you want to play around with, let me say, the profit you've made, you can easily play around with the profits you've made. But what we found out is that for a lot of people, they will leave the entire thing there. No, please, I want to make a gamble on this, the entire money. You get my point? And I think another thing as well is, especially with money, right, in the context of emotions, I feel like money making and investment in general, it helps us, or it tests who we are truly. So if you are someone that you say, you're a person of your word, you're a person of integrity, if you say you will do A, you will do that A. Right? Investment decisions and money making decisions test whether you are truly that person. When you say you do 30%, you take profit. Will you really take profit at that 30%? It's testing your integrity. There are a lot of people coming to say, the equities market now is buzzing. ETFs are buzzing. ETFs have done over 1,000%. You are someone that you said that, after you finish doing your budget, though, the only thing you can do for now is, let me just start with money market mutual fund because I cannot afford to allow any money to go. Right? Let me use money market mutual fund to build my emergency fund. You now see, people are saying, equity has done over 1,000%. It has done this one. You know those people that they used to be like, no, I don't used to be easily swayed by what people say. When you are investing or making money via investment options, it will now test it. Will you be that person that'll be like, you will leave everything you've done when you say you do money market? No, I'm not doing money market again. Let me go and do equities. Investment will test that emotions you have. So in summary, I'm saying risk captures both your emotions and reality. Emotions is just your emotions playing around, how you feel. And people can influence how you feel, right? Or you can even be the one putting yourself under pressure on trying to overperform, over deliver, etc. So I hope that answers your first question. Now your second question is, what's a good finance scaling roadmap that has worked for both you and clients you worked with, especially for low income earners? It's a very good question. And I think I sort of tried to give an example of how I started investing. So I think for me, maybe I should just even use my story since you're saying me and my clients. So I think what really helped me was I served in a company that's my NYC. I did my NYC in a company that was very big on financial literacy. And we were very big on what you say. We're very big on talk and do, right? So we'll be teaching people a lot about global ETFs, foreign ETFs, money market mutual fund, all those things. And I remember that time my CEO then would say that, when were teaching all these things, we must make sure we're putting our money to good use. Because another thing as well that I should also highlight is that even though equities are risky, there's something we call the time factor when you're investing in equities, which is I would only invest in equities for, at least for someone who is not trading, for an investor, someone who is, not in a hurry to make money. I would only invest in equities for them if they tell me they have a minimum of at least 3 to 5 years. Like they don't need that money for the next 3 to 5 years. I'll say put your money in equities. So it means that for someone who is just starting, you have that time factor because you're not in a hurry. But mind you, you are putting the money that you can do without inside it. So let me say I have 5,000 somewhere. I can just buy an equity or I buy an ETF. So if you feel like, I'm still quite scared, okay, let me just buy an ETF. It helps me with diversification because there are a lot of equity securities inside it if it's an equity ETF, right? So for me personally, when I was starting, I did some global equities / ETFs, even Nigerian equities. I did it here and there. But what I was also very big on was ensuring that I never joked with my emergency fund because I lost my father when I was in university. So I knew that I had nobody that was going to bankroll me. Like I had nobody that was going to bankroll me. I felt like my mommy had done the best that she could do for me, which is, at least supporting me till I finished school. So it's now more like, there's no uncle or auntie to help you. You have to make wise decisions. So even if it's just 5,000 naira when I'm starting, I'll just put it in equities. But I had more of money market investments in my investment bucket because there were things I needed to ensure were sorted, like emergency fund. Nobody prays for emergencies, but emergencies happen. I always tell people if you don't have money in a money market mutual fund for emergencies, you have no business going to do equities because you want to first ensure that the capital preservation side of things you're good before taking more risk. But like I also said, we are young, right? And we can take more risk. So yes, take the risk, but it can just be in a little measure. But if you're also doing little measure, do not expect plenty returns. Don't put should I say um um 3,000 naira in equities and you expect that you will get something very significant. Your 3,000 naira will jump from 3,000 naira to 500,000 naira. No, be very realistic with yourself. It will not jump to that. It will take a while, right? But don't forget, you are just starting. So your focus should be on building consistency, discipline to say every month I must put something aside. So when I started, that was what helped me. Every month, no matter how tight it was, I ensured I invested something. Like so, even now that I'm actually earning more, like I can't do without investment. And these are things people would unknowingly just pick up from you. I was initially living with my younger brother, and I would see my younger brother doing his budget. So whenever I get salary every month, I don't plan based on expected income. Whenever I get salary every month, me, I've done my budget. Oh, this is the person I'm going to, these are the people on my black tax list. Because I cannot help everybody. I had to also cut out of savior mentality, trying to know. You plan with God. These are the people you can help, all those things. You put them on your budgets, no matter how little. If it's like 20,000 naira that you can give every month, 50,000 naira you can give every month. At least once you've given that one, it just helps your conscience. So anytime anybody comes next and say, this one, at least with your full chest, I don't have. And don't forget, any money you've logged in cowrie-wise, or you've logged in any stock investment you've done, keep it there. Not that one family member will not come, not say, this one, that one. You will not say, you will now take it out. Definitely, there's also wisdom. There are times that you might need to just, maybe take it out a bit to just sort of provide some support. But I'll leave God to guide you. So, summarily, the first option is number one, focus on building consistency. Do something. You must invest every month. Don't put yourself under pressure. Do equities, do money markets, but little here, little there. I hope I've been able to help you and not confuse you. Thank you so much.
Thank
Thank
you so
you,
much
ma'am.
for that answer, Katie. Yes, so thank you once more to our facilitator for such a valuable session. So I would now invite going to the next session where we have a space of presentation to be given to her. So I'll invite Adekola Oyeniran to handle this segment.
All right, thank you very much. I hope everyone can hear me. Hello, I hope everyone can hear me.
Yes, we can hear you, Kola. We can hear you.
All right, all right. So on behalf of SP Warri Nigeria section and the entire members of the technical team, we present this certificate of appreciation to Mrs. Jesse Shetuntun Emmanuel Gia in recognition of facilitating our February lecture series on financial investment strategy. Thank you very much, Ma. We really appreciate. We cannot really quantify the level of impact that your session has had on us, and we pray that you keep growing higher and higher. Thank you very much, Ma.
Thank you very much for having me. I enjoyed facilitating the session. I mean, any opportunity I have to just help people make good financial decisions, I always love to jump on it. And I think this is also where I need to make a big shout out to my friend, colleague, Paul Alabi. Thank you so much, for the invite. I really do appreciate it, and I'm glad that you all got value. I think what will really be most important to me is you leaving this session, at least doing something from what you've learned in this session. And after doing it, also teaching other people. I think that will give me great joy and pleasure. Thank you once again for having me, and do have a great weekend. Bye, everyone.
All right,
Ma.
so
Thank you very much,
Casey,
Ma.
before you leave, we'd love to have a photography session and then quickly wrap up. So everyone, if you just take 1 minute, just kindly turn on your camera so that we can see your beautiful faces. Let's have this photography session. So, Paul or Will, I believe someone is taking a screenshot, so we can just have that. Yeah, so maybe we'll just say SP wants to go SP, so we can take the screenshots. All right, so I'm taking the screenshots. Can you confirm?
So please hold on.
William, can you confirm if you've taken the screenshots so that we can?
Yeah, I've taken screenshots now.
All right, thank you. Thank you so much again, Katie. So to wrap up, so we have our SP awareness and upcoming events to be handled by Jeanette. So Jeanette, you have 2 minutes to quickly give us a run through of what we have coming up. Thank you.
All right, good evening, everyone. Good evening, everyone. I'm Jeanette Adisuju. I'm going to take the SP awareness section for today. We have our next program on the list on the 20. We're going to run from 20 to 21st of February this month. That's Friday through Saturday. It's a 2-day intensive training on Aspen ICs, and the timing is 8:30. It's a technical lecture, a virtual technical lecture, and the program is going to be headed by the RANT, that is the Royal Ground Engineering Training Services. Are going to join. Are going to be anchoring, facilitating the lecture for that day. But before the program, we are advised to register using the registration link. I'm going to provide. Okay, I'll provide that before the end of the call. There's if you don't have it yet, so that it can be added to the training group for the program. And the training, sorry?
It's on the chat box already.
Okay, all right. Thank you very much. Our trainer will be Prince Christopher, who is the MD of the RNT, and our host will be by the YP chair, Wobby section. Look at me. I'm sorry, the pronunciation is wrong. Emi. Then next, the program is specialized for talent development, so it's very crucial for we to attend if you want to get more insights on Aspen ICs, training on Aspen ICs. Our next program for the month will be on the 28th of February, that's on Saturday. This program is also a technical virtual lecture, and the timing is 12 p.m. The title of this lecture is Data Analytics Fundamentals for Oil and Gas Operation. This program is going to be facilitated by Sir Chinedu Nweke. That's for the programs we have for this month, for the remainder of this month. And I believe if we attend, we are going to gain a lot of knowledge and insight from it. We're going to move on to as being a SPE member, the benefits attached to it, and process to go about it. Once you get to SPE membership, the benefit attached, you get first-hand information, first-hand internship and career information. You get mentorship programs from industry leaders. There's a chance for scholarship and trainings, access to vast technical and professional resources, library, knowledge base. You can also network with industry leaders and professionals, both locally and internationally. If you're not yet a member, you can. Okay, I'm going to drop in a link now in the group to complete that. It's a form, Google form. If you can scan the QR code on the flyer out, there's a form to register. I just posted that in the chat box. Please confirm if you can see it. And I also posted a picture too, if you want to scan the QR code. So you can do that to gain, to start as a member. And if you're already a member, you can also renew your membership to unlock other opportunities. Thank you very much for giving me this opportunity to facilitate this section of the program. I'm going to be handing over the mic to this moderator now. Thank you very much.
Thank you so much, Denise, for doing that thoroughly. So yeah, once again, I'd like to thank all of you for staying to this point. They say that all good things must come to an end, but I believe that the value that we have gained from this section, from this professional lecture, cannot be like quantified. So as we draw close to the end of this lecture, I want to invite Joseph Adera to give us the closing remarks and votes of thanks. Thank you so much.
Good evening, everyone. Can you guys hear me, please?
Loud and clear. We can hear you, Joseph.
Okay, thank you, moderator, for this opportunity, and to SP Worry session. Wonderful. Thank you for giving me this opportunity. So, for the closing remark, I will say conclusively, financial investment is a journey, not a destination. So, I want to advise and admonish each and every one of us to start early and stay consistent and watch our wealth grow. And to everyone joining us today, I want to say thank you on behalf of SP Worry Session. We want to say thank you for joining us, and we hope you gained valuable insight to kickstart your financial journey. And your participation is also appreciated. To our speaker this evening, I want to say thank you very much for giving us a very insightful session. And like you said earlier, we believe and we promise that we are going to kickstart our financial journey and grow definitely. Thank you very much once again for this opportunity. God bless you all.
Thank you, everyone. Thank you for joining. Thank you for having a wonderful night rest. Have a wonderful weekend. So the meeting was recorded and also streamed live on YouTube. So you can always go back to this channel. And if you are currently here and you have not subscribed to the SP Worry YouTube channel, please go and subscribe as well. So we'll gain more traction and more people will have be able to gain value from what we've done. Sorry for the extra attention. So see you guys